All right, so I wanted to get on here and talk about the engineering of liquidity. What is that? How to trade against it, et cetera, et cetera. This is going to really, really help your trading when you finally understand this concept. So I got this question in my free community that said, hey, what is engineering of liquidity? And I said, the engineering of liquidity is basically when they bait people to create new orders for them to take those same orders at a later time. What orders am I talking about? I'm talking about stop losses. They're basically baiting people to place stop losses in certain areas so that they can go and take those same orders at a later time. And if you're wondering how to be in this free community, this is a free community for anybody to join. Look at the link in my description right now and feel free to join it. Come trade with us, come trade with us and subscribe to the channel while you at it. So what I said here is we have relatively equal lows around our 17603.50 target, and many people see that as a support level. So what does that mean? That means people are now in buys and they have sell stops in that area. So let's look at what I'm talking about. Let's look at what I'm talking about on the chart. So this target right here is 17603.50. It's something we were talking about since really when price was all the way up here. We talked about price making a big move down. We had to deal with a whole lot of chop before we got there, but today we finally delivered to that target. But this message on engineering liquidity was actually written yesterday. And just to show y'all, this was on the weekly watch list that we had this Sunday. I talked about price making a move down this week. We hit the first target, and this was the second target down here, these same lows. But back to price action. So yesterday, we come right by those lows. And what do? We fall just short of it. So that's frustrating for people who were taught to trade liquidity, like, oh, target, swing lows. But the thing is, sometimes you get caught in the engineering process. So one thing I could say is, as I talked to y'all about, there's always safe targets to take, such as lowest bodies of swing points. So on the 4-hour, you see we have a swing point right here. If you would have gotten out of your cells at the lowest body, then you actually would have had a chance to get out the play right there, right? But when it comes to the actual liquidity itself, right, the actual wick, you never had a chance to get out. You never got an order filled, and price made a nice move up. So let's look at that move up here on a 15-minute. So this happened, and then the market closed. So that must have been frustrating for people that was waiting for their order to get filled. They never got filled. They probably got stopped out on this big move up. This is a run on trailing liquidity. So that's for one. Now, in the community, like we were looking at this live together. In the community, I talked about how, hey, as we approach this level, wherever it's at, hold on, let me go back and get it. Yeah. Okay, so as we try to approach our main target, the 17603.50, we will use this fair value gap to take us lower if we're indeed bearish. So we were watching this fair value gap right here because there's just certain things that happen during bearish delivery. For example, I use like 2 lines of defense here to tell me whether or not we're gonna go get that target. So when price leaves this green candle, right, and then makes a move down, as it trades back up, really we should have rejected this green candle to make a fast move down through the yellow line. But when that didn't happen, I said, okay, cool. This is our last line of defense, because if we do not use this fair value gap to go lower, we are absolutely going to make a move higher, and this will just end up being another relatively equal low to the 17603.50. So when price action looked like this, a person can zoom out and say, oh, look, we got equal lows here. What is that? That's a support level to people in their eyes. They see that as a support level. And I'm able to get out the way because I'm simply looking at signatures that should hold in bearish price action. So once I see we consolidated in this fair value gap, which is also that's a bad sign in itself, because typically in bearish price action, when you're this close to liquidity, you have no reason to consolidate in this fair value gap. It should be a quick delivery. When smart money is going for liquidity, it's quick and aggressive, and I'll show you guys what it really looked like when it happened today. But that's how we knew we'd make a move higher, and I talked about that, and that's exactly what played out. And in the community, I told them, I said, when you notice that we're going to end up making a deep retracement, meaning when we're in that engineering process, because we just put in the second low for people to see this as relatively equal lows, cool. All you're saying to yourself is, did we actually reach our objective? No, we did not reach the 17,603.50. So if we didn't reach 17,603.50, you have to identify what is price trading up for. So we come and we find our POI. We find our POI. And that's something that price could use to take us actually to the target. So we consolidate here in Asia, and then we finally identify, okay, we have an hourly RB. That's something that price could use to take us to the downside. Cool. And specifically, we are absolutely watching the 50% of this area. So what happens here around 2 a.m., look at 2 a.m., we came right to the 50%, pretty much to the tick right there. And then price started to reject. Price begins to reject. Once I see that, that told me everything I needed to know. And I know we're coming to 17,603.50. I'm just hoping that it's going to be a clean delivery. But which it was ultimately clean. So now we waiting for time and price to align, because we don't just trade at random times, right? We waiting for really that 930 candle. Really that 930 candle when price should get energetic, because that's typically when they'll go for liquidity, when time aligns. Why? Because that's when people have orders in the market for them to come and take. You gotta look at these market makers like sharks, some evil sharks that just want to just take your money, right? They're evil like that. So once you see price start to break down here, this is 9, 10, 15, 20, 25. All right, price starting to break down. You know where price wants to head to. All you have to do is find a fine entry for yourself. If you want to be someone that takes breakouts, that's your breakout entry right there. You could just take the breakout. If you're somebody that trades a pullback, you know, there was opportunities there on lower time frames. I know I'm on the 1 minute, but you could have seen it on a 15-second. But ultimately, what did price do at 9:30? Like, this is the definition of time and price right here for y'all. Y'all literally see the first thing we did is we ran straight to the target. Straight to the target. Straight to the target. See? Delivery. My fault. I had to take a call, but getting back to what I was saying, right? You see, look what time we ran to the target. Right at 9:30 open, which is literally where I got in at. Around that 9:30 open, using a 15-second time frame. And for my reason for entering was, obviously we had all this consolidation, but I know we're gonna make a run to this target, this liquidity down here, because there's no reason to engineer sell stops here, because this is another form of engineering liquidity, which is essentially any consolidation. And when the draw is lower, meaning when price is aiming to go lower, we a lot of times do run out buy side before pressing down. But I do know if we just simply break to the downside, then it's gonna hold and there will be no return back into this area. So when I see us break to the downside here, leaving a fair value gap, yeah, I'm in that play. So I hop on this play. It's technically an impulse entry in the sense of I didn't buy a pullback. But what I'm trying to explain here is not every play needs to be buying a pullback, because in this sense, this fair value gap here is something I don't expect to get traded back to. And I don't expect us to trade back to this one either on top. If you can see these two 15-second fair value gaps, you got one right here, you got one right there. Both of these are things I don't expect to get traded back to before we hit the yellow line. So in this scenario here, I actually don't expect a return back into this consolidation. So I'm either gonna take the play, like if we get a movement that looked like this, or if we get a movement that looked like exactly what we saw, which is just simply a breakdown, which would be like this. Either way, I'm gonna be involved on the way to this yellow line. So that's my reason for entering the play. And then my reason for exiting the play pretty much at the bottom was, we clearly have an impulsive move to the downside right now, right? But guess what? The daily target or the daily objective was met, which is running that 17,603.50. So now I'm watching this fair value gap right here to see if we respect this from lower prices. Once I seen us disrespect it, I got out this play right here. I got out this play right on this green candle. Once we disrespected this red fair value gap, this SIBI, this bearish fair value gap, I got out the play. But nonetheless, you see what happened here. This is a mix of time and price. Time and price. You see when we broke down right at 9:30. This is seeking the short conditions. This is the stuff you must see account up in versus just trading the clean move. We already knew we was coming to the yellow line. It's about when we will go there. We will go there when time aligns. It's not just about price. It's about time and price. But, you know, this like mini lecture here is more so about the engineering of liquidity. Look how we ran out. You see this liquidity that we had generated right there? All the people that had stop losses on these lows, they got ran out in this one move, quick shot. All we did was make a retracement back into a POI, and then we finally delivered. So this stopping short of the liquidity that we were targeting, yeah, that right there that's typical. That's typical right there. And look what happened after we ran the target. We had a big move back up to the upside. So that's another thing. Price always has an objective. Look what happens after we run the objective. We get a big move back to the upside, and then, you know, lo and behold, we actually ended up really making a strong move back down, which was surprising because I really felt that this is all we wanted today. I do think we're going lower in the market, but I didn't think we would go and try to do that today. But right now, I believe we're still consolidating because that's just what I got an alert for. So yeah, we still consolidating right at this low at this moment in the video. But yeah, this is just an example of engineering liquidity. So be careful being in the engineering process because a lot of us, we learn about liquidity. We learn to target liquidity, but you have to understand that you may be a part of the engineering time period, which is this area. They were still engineering. So right now everybody had accumulated more stop losses in this area by that old low, by that 17,603.50. There were more stop losses placed under these lows right after that. So that's what we ran for today early in the market. Met that objective, pushed up, and then here we go. And we'll see what the next objective is. Now, I do personally think we go a little bit lower into these lows, but you know, we'll talk about that on another video. So that's what we got.